So in this webinar, I'll be talking about how professionals create and manage a multi-asset, multi-strategy portfolio to create multiple streams of income for their firms and for themselves. Now, I'm sure that by now you have watched many of my videos, my webinars. I've talked about stock investing, I've talked about stock trading, Forex trading, options trading. You've learned about cryptocurrency trading. And some of you are probably thinking, where do I get started? There are so many strategies, there are so many instruments. Where do I get started, and which is the best strategy? Which is the best instrument to trade? And I'm here to tell you something. There is no best strategy. There is no one way to make money in the markets. There are many ways to make money in the markets, and they all work if you know how to use them correctly. It's like going to a chef and asking the chef, hey, what's the best way to cook fish? That's a crazy question because there's no one way to cook fish. You could deep fry, you can barbecue, you can steam, you can smoke, you can eat raw sashimi. There's so many ways to cook fish. So in this webinar, I'll be talking about all the different ways to cook fish. Now, all the different ways to make money from the markets, and how do you choose one that works best for you, or to choose a combination of strategies that works best for you. If you're ready, let's begin. Now, let's begin by talking about an overview of all the different ways to make money in the markets, all the wealth building systems. So it first begins with the instrument you use, the asset which you use to create your wealth. And there are many instruments or assets. So for example, you could invest or trade in stocks, or we call it equities. You could trade in Forex. You could invest in real estate. You could trade with options. You could trade cryptocurrencies. You could trade or invest in bonds, and finally trading in commodity futures. And all these instruments create wealth. Okay, they generate cash flow. Now, common question I get asked is, hey, which is the most risky instrument? And there's no such thing. Why? See, risk comes from a few things. Number one, risk comes from the risk per trade which you use, or how you size your position. For example, let's imagine you're trading stocks and you're risking 10% on one trade. And you trade Forex, you risk 1%. So which is more risky? The answer is stocks, because you're risking 10%, but in Forex you risk 1%. So it's not the instrument that gives you the risk, it's how you trade it, the leverage you use, the risk per trade, the position sizing. Okay. At the same time, if you trade cryptocurrencies and you risk 1% on cryptocurrencies and you risk 10% on Forex, then Forex is more risky. Depends on that. Okay. The next thing is high risk comes from not knowing what you're doing. You see, I always say in life, everything is risky when you don't know what you're doing. Okay. In fact, getting married is the riskiest thing you can ever do. If you don't know what you're doing and you marry the wrong person, right? You can lose half your shit or your sanity. Okay. If you don't know how to drive a car, you go drive a car, it's really risky. You can get into an accident, get hurt. But if you learn how to drive a car, you follow all the traffic rules of traffic signals, you drive defensively, you've got your airbags, your seat belts, driving is really safe. Same thing with these instruments. If you attempt to trade or invest in these instruments without getting your driving license, without fully going to driving school, right, eventually you're going to get hurt financially. But if you learn exactly how to trade each one of them, you follow the rules, you follow the traffic rules, the investing rules, and you have your protective mechanisms, your airbag, your seatbelt, it's really safe. It gets you to your destination. Savvy? All right, good. Number two, it's your time frames. Okay, so what time frames could you invest or trade in? Common question I get asked is, what's the best time frame? Should I use daily candles or 50-minute candles, or long-term or short-term? So again, there are many styles. First, you've got the investing time frame where you're holding for a couple of years. You're allowing the asset to compound and accumulate and build your wealth massively, right? Remember the story I talked about in my value momentum investing webinar on how to build a multi-million-dollar portfolio. I talked about this guy called Robert Reed, right? Who's a janitor. He's a janitor and a gas pump attendant, and he used a long-term investing approach, and he ended up with $8 million. right? Theodore Johnson, I talked about Theodore Johnson, right? Where he worked for UPS his entire life, UPS. And he made no more than 17,000 a month in income, but he ended up with $70 million because he allowed his wealth to compound and accumulate over time through investing, right? But some people also make their money short term, okay, like Paul Tudor Jones, for example, or Steve Cohen. So you could also use a position trading strategy where you hold your position for just 1 or 2 or 3 months. Or we also call that trend following. You follow the trend, get out when the trend ends. Swing trading, get in at the start of the impulsive wave or get out at the end of the impulsive wave. Swing trading is you hold it for a few days, usually 1 week or so. Then you got day trading where you buy and sell within the same day, within 24 hours. You got scalping where you go in and out in minutes. So, which is the best time frame? The answer is the time frame that suits your lifestyle. Okay? Depends on how many hours you have to look at the market every single day. If you don't have much time to look at the market every single day, you have to take a longer time frame. If you got more time, you look at it more every day. Now, here's the thing. People think that the shorter time frame, the more money you make. That's absolute rubbish, right? I know people who make more money in swing trading, holding for days, than day trading. I know people who make more money investing for years than day traders. So it is not the case where the shorter term it is, the higher the return. Not necessarily. The return comes from the leverage you use, the strategy you use, your position sizing. Okay, the time frame really has to do with your personality. Okay, next, method and style. There's so many methods to make money in the markets. Okay, and the interesting thing is that if you read this book called Market Wizards, where Jack Schwager interviews the best investors and traders in the world to find out their method, he found they use completely different methods. Some people like Warren Buffett and Jim Rogers, they only use fundamentals, right? Like for example, Buffett, he only analyzes the business, financials, intrinsic value, sales, and profits. He does not look at the charts or technicals at all because he thinks that's complete rubbish. Jim Rogers has said technical analysis is complete rubbish. But on the other hand, there are some people like Richard Dennis, people like, what's the guy's name? William Eckhart, people like Paul Tudor Jones, right? These are traders. And there's another guy, I can't remember his name. And some of these people, they make insane returns. They make like, 15, 20% almost every single month, right? They make a 200% return a year, and they use purely technical analysis. And they say fundamentals is crap, okay? So you got two great investors who make a lot of money. One uses fundamentals, one uses technicals. And you got someone like me who combines both together. Very different method and style. So there's no one way, there are many ways. Some people, they make decisions based on macroeconomics. People like Ray Dalio, people like George Soros, they look at interest rates, they look at all these macro inflationary GDP stuff to make a decision. Okay, so there are many ways. And again, there are some people, they are trend followers. They believe in following the trend. They buy on the uptrend, they sell on the downtrend. But some people, they adopt a mean reversion or counter trend strategy. They sell at the top of uptrends, wanting to catch reversals. They buy on the bottom of downtrends, wanting to catch reversals as well. Different styles. So question, what is the best system? So in the words of Jack Schwager, who again is the author of Market Wizards, who has interviewed the best traders in the world, he says, and I agree, that the key to success in the markets is to use a method, to use a strategy, an instrument that fits your personality. So what does that mean? It's like, when people ask me, Adam, what's the best strategy to use in the markets? It's kind of like asking, hey, I want to be a sports legend, right? So what's better, golf or basketball? All right? It depends on your personality, right? So can you imagine if Michael Jordan played golf? Now, by the way, he did attempt to play golf and he kind of like sucked at it, right? Well, he was okay, but he's not going to be world number one. Or imagine if Tiger Woods attempted to play basketball. He doesn't have the height, he doesn't have the speed, and he won't be a very good basketball player, right? So they are the best they are because they've chosen a sport that fits their personality, that fits their style, all right? So you got to find one that fits your style. So in this webinar, I'll talk about, understanding the pros and cons of stocks versus Forex versus options. I'll talk about the pros and cons of investing versus trading, and you got to use the one that resonates with you. See, the trouble is many people I know, they go for a course and they learn from a guru who's making a lot of money in options or investing, and they learn that strategy, but that strategy doesn't fit their lifestyle, doesn't fit their personality, and they find it frustrating or difficult to use that strategy. So you got to use a strategy that fits your belief systems about how the markets work. Great example I can give you is two contrasting figures. Warren Buffett, one of the world's greatest investors, one of the richest men in the world, and Paul Tudor Jones, one of the best traders in the world. In fact, if you don't know Paul Tudor Jones, he made $100 million in 3 days during the crash of '87 when he shorted the stock market. Okay, now these two people can't be any more different. So what's Warren Buffett's personality? That's right, he likes to take it slow. He likes to read a lot. He likes to analyze the business. He likes to talk to the CEO, shake their hand, look at their eyes, look into their eyes, right? And he likes to look at numbers. He likes to look at fundamentals and financials. When he looks at the charts, he gets a headache, right? So that's his style, and he does really well with that style. He has got the patience to wait for the investment to play out. He's got a patience to wait for a couple of years. He's got a patience to wait for a stock to be really undervalued before he buys a stock. He's got a temperament of going against the crowd. He's greedy when others are fearful when others are greedy. When everyone is buying like crazy in a dot-com boom, he stays away. When everyone is panicking during the financial crisis and selling, he's buying. He does the opposite of everyone else. He's a mean reversion, contrarian investor. He takes his time. Now, on the other hand, Paul Tudor Jones is more like a trend follower, right? If there's momentum, his market's going up, he buys, goes down, he shorts the market. He moves really fast. He trades bonds, he trades stocks, he trades currencies. And he's like, bam, 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 bam. It's going really fast. So Buffett is like playing chess. Paul Tudor Jones is like playing ping pong, right? And they both make tremendous wealth in the markets. Now, can you imagine if Buffett attempted to trade like Paul Tudor Jones? He would fail miserably, right? He can't move that fast. Okay, imagine if Paul Tudor Jones attempted to invest like Buffett. He'll get bored to death. He will die. Doesn't fit their personality. Savvy? Okay. Next, you have to find a key to success that fits your lifestyle. So like I said, if you don't have much time to look at the markets every day, you have to use a longer term approach. If you can look at the markets 2 to 3 hours a day, you can use day trading. Depends on your financial objectives. If your objective is to, get 40, 50, 60% returns a year, you have to use technical analysis with fundamental analysis. You have to combine investing with trading. Okay? But if you say, Adam, I just want to make 10% a year. I'm pretty happy with 10% a year. I don't want much ups and downs, just a steady 10% a year. Then you should do more of investing. In fact, you should invest in defensive companies and only invest in ETFs that are very, very safe, that are very defensive ETFs. So it depends on your style. So I'll teach you basically in the different courses, how do you construct the portfolio to fit your objectives. You want high growth, average growth, high volatility, low volatility. Right? If you have watched all my recent webinars, you know that I've got students who do really well with very different strategies, right? This guy, Tong An, do watch his interview with me. It's a great interview. Tong An is from Seattle, Washington. He's been a full-time trader for 3 years. And his style, he only trades the stock market. That's it. He's only a swing trader in the stock market. Nothing else, right? That's his style. And he's beaten the S&P 500 every year for the last 6 years. And trading full-time for the last 3 years, right? This year, he's up 42% versus the S&P of 21%. Purely trading. Then I've got people like Oscar, right, who's from Sweden, and he's purely doing investing, value momentum investing. That's it. He's not trading, he's just investing using my value investing course, right? He says, hello, Adam. Buying this course was the best decision I've made in my life. Last year, I didn't have a clue what I was doing in the stock market. I ended 2018 with my portfolio down 17%. Ouch. Earlier January, I bought this course. At the moment, I'm up 43% year to date. Just want to say a big thanks to you for the value you provide to this course. And again, Oscar's just doing investing. And I've got some students who are like me, they combine both trading and investing together. Like this guy, YY, or YNE, that's with his new wife, right? Beautiful new wife. And YY, by the way, I also have an interview with him. Do watch the interview. It's a great interview on black market. So he does both investing and short-term trading. And that's how he's been able to get a 169% return in 1.5 years. Back from 2016 to half of 2017. By the end of 2017, he was up 195%. And this year, well, he didn't give his update, but the last update that I have from him is he's up 25% for the year. This is for the year so far. But he just told me last night, hey, dude, I'm up 36% for the year. Great. And then I've got people like Eli, and he's just purely doing Forex trading and day trading. That's it, right? And he says, just want to share with you guys, since March to now, I'm up 26% return on my initial amount, right? 98% from Forex, 7% from guns. This is our stock day trading strategy. When I finally have a positive return, it feels like all the previous years of pain has paid off. Looking forward to learn and to improve. Have a great weekend. All right. And this is my Forex chat group where I've got students who make insane amounts trading the Forex markets daily, right? Achieving 6R today. 6R is 6%, right? Some people, 6R is 12%, depending on their risk per trade, right? I've got people like Ricardo who, is up like 70% just on trading Forex using our day trading Forex trading strategy, right? I'm not sure where he's from. I forgot. Sorry about that. Okay. Yeah. So, and this is also another one, Ricardo, who's up 46%. And Ricardo trades options, right? Trades options. Different style again. Trades options. And it says, just want to thank you and Bang to share such powerful knowledge. It's up 46% for the year. All right. People like Joshua, who trades options on Euro futures, crude oil, sweet crude oil, E-mini S&P, natural gas, options, making insane profits in the markets, trading options. That's it. So it doesn't matter. Options on Forex, you can make money in everything, provided you learn it well and you follow all the rules. Doesn't matter whether you drive a Mustang, you drive a BMW, Mercedes-Benz, you drive a truck, you fly a plane, you fly a helicopter, you drive a boat. You can do it and everything, but you gotta learn that vehicle, that transport system. So if you want to be the first to get my next video on YouTube, do click the subscribe button right now. If you want to check out my online courses, go on to piranhaprofits.com where you can enroll in our professional Forex, stock trading, options trading, and value momentum investing courses where you're going to learn how to trade like a professional and generate an income anywhere in the world. If you would like to come to Singapore to attend my live classes, Wealth Academy, go on to wealthacademyglobal.com. It's Adam Khoo, and may the markets be with you.